Hi, and welcome to the Midday Market Update for July 28th, 2020. My name is Kevin Hill, joined as always by Michael Vincent, where we take you through the freight markets and what's going on in the news and the analytics. And
Absolutely.
They tell me it's interactive.
It is interactive. Welcome, everybody. Peace and love on this fine Tuesday afternoon. So, yeah, interactive. Get your comments and your questions in. FreightWaves LinkedIn and on Facebook channels. And we'll do our best to address them.
We will.
Right? Won't we?
We will. We will do our best.
We will do it.
It's a fast-moving show, though. So
it is, and we got some good headlines. We got some good guests on here. Everybody bringing the knowledge today. So
yeah, we'll start off with the headlines with our own Andrew Cox, and then the freight market update with Zach Strickland, our director of freight market intelligence, followed by our lead or chief economist, Anthony Smith, to talk about those economic numbers. And then we have Richard Sharpe, who's CEO of Competitive Insights, talking about supply chain disruption. And then our very own, again, John Kingston, editor-at-large. They still haven't caught him.
Haven't caught him.
Talking about legal issues, actually. So,
I know where he'll be this just shortly afternoon.
Yes, it definitely will. But as always, let's kick it off with the headlines from FreightWaves.com. And Andrew Cox, what's our lead story today?
Kevin, the lead story comes out of a salesman in Ohio for FREIGHTLINER. He was sentenced to a year of probation and 6 months of home confinement, stemming from charges that he pleaded guilty to of false quarterly federal excise tax returns. And the way that federal excise tax returns are pretty simple for big rigs. The IRS requires a 12% excise tax on the retail sale, the first retail sale of any trucks weighing more than 33,000 pounds. Here's where it gets a little tricky, is if the dealership customizes a big rig by installing additional axles, therefore putting it over the 33,000 limit, the dealership is required to pay that excise tax. However, if a customer purchases a truck weighing less than 33,000 pounds, then customizes it, the buyer is required to pay the tax. The sales rep really just got popped faking the paperwork to make it look like the customer's purchasing the trucks and then customizing them, basically leaving them responsible for the excise tax. And he ran this scam pretty efficiently and pretty well. He says they were able to undercut the system and undercut the competition by about $20,000 on customized trucks by avoiding this excise tax. But of course, he has been caught now. He will serve, again, a year of probation, 6 months home confinement, and he has to pay $165,000 in restitution to the IRS.
That's interesting. I never understand how these scams slip through all the cracks, right?
Yeah, I don't understand it either.
There's a lot of cash that is unaccounted for.
So the dealership never noticed that they were undercutting the competition by $20,000, and somehow is he able to get all this paperwork past their finance and closing and all that other kind of stuff without anybody knowing what was going on?
I know, and it's
the dealership is like, we're free and clear, and he doesn't work here anymore. Well,
True, but you see this in a lot of different businesses where people will embezzle or do fraud for hundreds, thousands, or even millions of dollars, and it's always a head scratcher to me how people get away with it. For so long, I guess eventually get caught.
Long. Well, eventually they usually get. I guess most of them get caught. I mean, the ones we don't know about, right?
Yeah. Exactly right.
Yeah. How he was able to do this without the dealership knowing it is like implied in the article, right? He doesn't work there anymore, so they've let him go. But they've got to be investigating them. How does a salesman do this without the dealership knowing he's undercutting everybody by 20% and changing things around? I mean, they're doing the work. The dealership's doing the work. So there's there's different departments involved with those invoices going back and forth, because there's internal invoices that are going back and forth as well. So yeah, I don't know. And then he gets confined to home.
Probation and confined to home. Right? The double whammy. Yeah. Our next article on FreightWaves.com is about drivers and the situation during COVID-19 and their sentiment and attitudes. What do we have there, Andrew?
Yeah, Kevin, drivers still gripe about the normal things. Drivers gripe about long detention times, equipment changes, and adapting to new technology. But they're generally pretty happy with the way that their fleets and their companies have communicated and treated them during the COVID-19 pandemic. Workhound CEO Max Farrell says transportation is a people-centered business, and this has been highlighted at this time of crisis. He goes on to say, when it comes to driver positivity, the people category is far and away the most consistently positive theme. Satisfaction with communication has also been on the rise throughout this pandemic from drivers.
It's good. Yeah, there's been a lot of positivity, a lot of good things. We highlight it into our good news of the day.
Yeah, there really has, and the communication from the trucking companies to their drivers and realizing their needs as we've gone through the pandemic from the very beginning. I mean, we saw it in the stories. This really doesn't shock me. This is proof that things are on the rise, and it says that the satisfaction is on the rise with the communication and so on. And I think that's what our stories that we've been covering throughout on this program and other programs really have shown. If you go back and look, that it has improved, right? Even talking to Ingrid Brown, who's a regular on What the Truck as well. She's driving all over the country. Her, bringing this to light, et cetera, and others, it definitely improved throughout the entire thing. I thought it was interesting as well that driver turnover was still at 89% during the first half.
Nothing's going to stop the turnover.
Nothing's going to stop the turnover, right?
Tsunami of activity. What about the pandemic itself, Andrew? What are drivers saying about that?
Yeah, COVID generated the 6th highest number of comments from drivers on the WorkHound app in July. Of the a little bit over 18,000 comments, about 9% mentioned COVID. This is down from a peak of about 14% in April, where it was, I think, the number 1 or number 2 most cited comment, and it's actually up a little bit from June, up off the bottom of 4% in June. So, but also some of the people said that drivers have regarded COVID with relatively low urgency, and even many of them thought it was a bit of a conspiracy for the time. So. Things have gotten a little bit better on the front of realizing that this is a very serious thing for the drivers, but overall they've kind of taken this thing with a little bit of low urgency.
Very interesting. I mean, you could see in the numbers that Andrew was talking about, Kevin, that it follows, right? Kind of it was starting to slow down, so the communication or the feedback on it was less.
Yep, the chatter,
less importance. But now you start to see some resurgence in different areas in the country, and now it's picking up again. And it would appear, or you would hope, that, and it does appear that most companies and most carriers, et cetera, are better prepared if it were to get as bad as it were before, right? For a resurgence, right?
Yeah,
what is needed, stationing those things, communicating with people, that type of stuff. There was parts in that article, and I go to FreightWaves and read that article because there's what was the Milton? Was that the company that was also in there, Andrew, that was part of that article?
Yeah, that's right. Towards the bottom there, Melton Transport is also mentioned as a highlighter of who's done a good job making sure their drivers have stayed safe. I think they've got 1,200 drivers moving loads right now.
Yeah, part of their like I think they waived instead of the hazard pay, they waived the copay.
Okay.
And so their drivers at any time could speak to to doctors and that type of stuff without any monetary expense, without any expense, which I thought was an interesting take on it. Was an excellent take. Their drivers loved it. So
that's good. That's good. It's a good company. That's where I started off in transportation. Melton Truck Line.
Oh, is that right?
Yeah, it is,
they've improved a lot since you left.
So we've seen, so we've seen mandatory masks in a lot of retailers. Walmart, a few others are following suits, and that's no different than what the travel plazas and truck stops are doing right now. Isn't that right, Andrew?
Yeah, Kevin, I got another story for you of businesses trying to keep drivers and trying to keep people safe and curb COVID-19. Pilot, Flying J, and Travel Centers of America join a long list of truck stop chains that are now requiring face coverings to enter their buildings. Pilot announced this decision on July 23rd. This came just 2 days after Love's, a major competitor, made the same move. But there is some dissent. There are some drivers that are voicing their disagreement with the decision. Christopher Hill out of West Virginia says he will avoid fueling at places that require masks. My only thing too, Christopher, is with the 3 largest chains now all agreeing that they're going to require masks, he may find it difficult to fill up at a station that doesn't require to wear him a mask.
Yeah, that's going to be tough to do for Christopher Hill, no relation. Of course, from West Virginia, as the 3 major truck stops and travel plazas are requiring face masks, you might be paying more for gas for not wearing, I guess, the premium of higher price fuels compensates for not
more difficult to find.
More difficult to find.
I don't get that. I mean, there was nothing in the article of why. I guess he refused it. But Dooner and I talked about this on XM Radio, on Mad Dog Radio on Saturday, and talked to a bunch of truck drivers, and really their disagreement with these things was just that it's not. if you wear it and you think you're totally safe, that's what they're kind of against. You got to keep wearing you got to keep doing everything, washing the hands and so on and so forth. And one of them was actually a former medical, a nurse for a number of years. One of the drivers was talking about the micron levels and so on. It does help. Why would you not wear it? I don't get it.
True. I mean, I don't think anyone really enjoys wearing the face masks around, but if it works, and certainly if we do that for a little bit and are able to really more than flatten the curve, but eliminate the spread or the momentum at least.
It helps to a degree. A lot, a small, a medium amount. I'm not a doctor. It helps. I understand that from everybody saying it does help as long as you follow all the other protocols. So why wouldn't you do it?
Sure. And it's part of life too. You do things you don't want to do. But it's life.
Sometimes
right?
you got to do it.
Just go with the flow. Let's switch to the airlines, Andrew, and some earnings. And it looks like United Airlines cargo division did very well this past quarter.
Yeah, Kevin, the U.S. airlines have been touting how much dedicated cargo they've been flying during this pandemic in transformed passenger cargo, or in passenger planes, excuse me. But United Airlines has really been the only airline to see that where the cargo has actually boosted the bottom line. United reported a huge 37% increase in cargo revenues quarter over quarter, and cargo ton miles, another metric used by cargo flyers, grew 40%. But even more impressive was that cargo revenue totaled or comprised 27% of the total operating revenue for United, while it just came in at 2.6% this time last year. So compared to the competition, Delta Air Cargo revenue plunged 43% in Q2. Southwest cargo revenue fell 14%. So while all of the airliners have been kind of talking the cargo talk, United has been the only one to walk the walk so far this year.
Yeah, there's a lot behind this story, right? There's a lot of things to talk about. How does the air capacity come back? What is the new form of the passenger airlines? Does it revert back to the beginning when they had freighters and they only had so many passengers, and then the passenger demand actually increased or caused that capacity for belly cargo to appear and be available on specific lanes, and it kind of developed that way? Are we reverting back to that type of thing? And it was only a couple weeks ago that the United States allowed for the removal of seats and the stowage of freight in the upper deck. Is that not right?
That is right. Yes, it became official. Right, Andrew?
Yeah, it was a pretty late in the discussions where the U.S. actually gave the go ahead to remove the seats.
Okay. Yeah, so I mean it's fairly recently, and it was like too late because bookings were on the rise and stuff like that. Will air cargo do it? I think they're probably rethinking that stance, and they probably do it.
They probably are, yeah.
Especially after that. United did it, and it's helping quite a bit. You see some that really didn't get into that much, and they're hurting pretty bad.
Exactly right, yeah.
So I would think it is definitely a topic in some boardrooms right now.
Yeah. And it looks like we're going back to earnings for our final headline on FreightWaves.com, and we're talking about Full Truckload and USA Truck out of Arkansas reported earnings, and much better than expected.
Yeah, they fared pretty well. USA Truck reported a Q2 net loss of just $513,000, or earnings per share loss of 6 cents per share. This beat analyst expectations by just about 30%. While consolidated revenue did fall 7.4% year over year, they only fell 3% when it excluded those fuel surcharges. USAK says that 80% of its customer base is essential or quasi-essential, and this is what caused them to take, quote, lower price spot freight, and which drove down tractor revenue per tractor lower in Q2. However, despite these headwinds, USAK was able to trim 80 basis points off of its operating ratio, which is high for compared to the rest of the industry. But in any case, they fared pretty well.
So you're going through the earnings season, Andrew. Are you seeing a trend with, especially in the quotation mark, the truckload industry, or these trucking companies, the logistics companies, are the more diversified carriers faring better in earnings than those that are less diversified? And I guess that would be by industry, but also their logistics offerings, right? I mean, those that are more heavily weighted towards rail versus truck, or a combination of both. Are you seeing any trends there?
Well, the one thing I have seen is that these analysts that cover these trucking companies obviously don't have sonar, because they would have seen that the volumes have been much better than they are even projecting, and they probably wouldn't have had their analyst expectations be so bad. You're seeing beats across the board for many of the trucking companies. So I'd say that they don't have sonar is the one trend I'm seeing.
An observation.
I agree with that. I definitely do. And you're finding, like USA Truck, where 80% of their customer base is essential grocery items, general merchandise.
See, that's what I'm talking about. And then you have others that were heavily into automotive, and they were hurting at the very beginning, but now they're starting to come back and do a little bit better.
Yeah, and that's the story you saw with PAM Transport, which is very heavily weighted
absolutely.
To the auto industry. They had a disastrous first part of the quarter, but they're bouncing back now.
Right.
Which is a good story with that.
Yeah, absolutely. And then those large ones that are players everywhere, when you look at their earnings sheet, you see differences, right? Their truckload side actually did fairly well, but if they were heavily involved in intermodal, rail, et cetera, obviously
it's going to be down.
Yeah, it's going to be down in that particular sector, and maybe overall, depending on what your percentage of concentration is, right?
Yeah, you're exactly right. Very good. Well, you can find all these stories and much, much more on FreightWaves.com. Thank you very much for your time today, and the headlines, Andrew Cox. And
excellent.
Next,
Zach Strickland.
Zach Strickland. I think Zach is set up and ready to go.
He is our Director of Freight Market Intelligence.
Very good.
What you got for us today, Zach?
Yeah, so the big news today is the OTVI, our outbound tender volume index, pressed over 13K for the first time ever. It's the highest value recorded by the outbound tender volume index, and a lot of people are very, it's almost unbelievable even for me, just to see how far that index has grown here over the last couple of months, considering just a few months ago we were at all-time lows for non-holiday period of time. We were right around 8,500 in mid-April, and it's grown all the way over to a record level. So it's quite astounding to see this. Volumes are up nearly everywhere in the United States. All the bigger markets in the country, Atlanta, Harrisburg, Los Angeles, Ontario, Joliet has joined the fray as well. They're all seeing pretty decent size increases, and especially year over year. It's almost unbelievable. And to what we were just hearing with Andrew, a lot of these people may have seen this coming had they just seen, this under the hood look at the trucking market itself. One of the things people like to compare it to is the Cass Freight Index. You and I have had this conversation, Mike, where people try to apply the Cass Freight Shipments Index, which is a strong, awesome index, very representative of the overall freight market in itself, but it is not a pure truckload index. It has rail movements, car loads, intermodal, et cetera, all built into it as well, and it's a very mixed up view of the freight market, which we both know, the intermodal sector. And just looking at some of these company earnings, you can see it clearly if you break down their income statements. You can see these companies like J.B. Hunt, who actually showed an increase in revenue for their trucking sector, while showing year-over-year declines in total, and that's because they are 75% intermodal and dedicated carriers. So the intermodal volumes really dragging a lot of these carriers down, especially the ones that are involved in that. But the truckload sector continues to be a pretty strong mover right now. Van volumes leading the way, unlike we saw in March with reefer really taking a charge with the food and beverage side. But van volumes are definitely leading the way right now.
So when you're looking at it, you said that you've got growth in the vast majority of markets around the United States, and I would suppose that would also include the different lanes, because you can look at different lanes and clearly see that the majority of business on those lanes is like a warehouse to warehouse movement, right? And we always talk about like the Inland Empire to Stockton, California. If that's going on, it's really warehouse movement, right? Warehouse to warehouse repositioning and stuff like that. So Zach, is there indication that this is consumer driven, or are we seeing the fact that it is breaking a new level now, OTVI that is, the outbound tender volume breaking over 13K? Is that indicative of the fact that or are you seeing, or is it of your opinion that industrials are starting to support this, and that's what's driving it even higher than the surge peak, which was totally consumer demand driven back in March?
Yeah, we're seeing a totally different freight market than what we saw in March. That was very short haul centric, very DC to storefront, DC to final end user centric. Any kind of short haul movement really indicates that final mile type move. But right now we're seeing really it's all over the place. We're seeing long haul freight volumes increase. Short haul freight volumes are increasing. There's a lot of movement. There's intra-warehouse movement, like you mentioned, but it's all over the board. It's literally going from every length of haul you can imagine to everywhere, and a lot of this just has to do. I think that we are seeing something like these warehouse repositionings that were taking place in May that were really the signature move of the recovery. Now people have even with COVID cases increasing and stuff, that doesn't mean that everybody just stopped working. Supply chain management has been a big challenge this year. So, they're trying to reposition their freight, but now they also have demand recovering. And just like you said, the industrial sector of the economy here over the last few weeks is showing signs of life. We've seen rail carloads increase significantly, for things like automotive, motor vehicle parts. Things of that nature that are indicative of that underlying raw material and the industrial economy. We just had durable goods show a big increase as well. So there's a lot of things starting to come into place that may actually support increased bull run movement for the freight market here over the next bit, because the industrial sector has been largely dormant during the freight market's recovery here over the last few months.
That's a really good point, Zach, because I was going to ask you, and this ties into what you just finished up with the bull market run, is that we were 29%, I think the peak was 29% year over year. I can't remember the exact number on Sonar in late March before the plunge in April. And that was just all essential items. So if you turn on the industrials as well, you're going to get a monster bull run, probably. But how far are we above that late March high right now?
Yeah, we're actually not that far above it. We're only 1% or 2% above that that value. We were about 12.9. The difference here, we were 12.9 in late March. We're about 13.1 now, 13.1 thousand on the OTVI. And the difference here is, the mix itself is completely different. You've got reefer volume supporting a larger percentage of that movement back then. With food and beverage really taking hold, that was a lot of grocery people obviously needing to stock up for the quarantine. And now we're seeing a much longer, more sustainable growth period in the freight market. Volumes have been on the rise or trending higher really since that mid-April, right around Easter, and it has not really slowed down that much. We've had a few little hiccups after the 4th of July. We saw a little bit of decline. We thought that we were going to enter that seasonal downswing that we see in July as things start to settle back down, but sure enough, a week later, volumes started to pick back up, and they're picking back up incrementally. You're not seeing these large spikes. You're just seeing the volumes kind of aggregate. And that's something that we saw in 2018. It wasn't like overnight the market just collapsed. There was a nice slow roll of volumes over time. And then all of a sudden you had this inflection point, and all of a sudden the spot market just blew up on everybody and increased rates significantly. And that lasted for a significant period of time, talking about 3 to 6 months. And that obviously had this fire behind it with ELDs, and we had hurricanes, et cetera, that really kind of made this sustainable bull run for the freight market that allowed contract rates to increase as large as they probably have in recent, at least in my recent history in the last 15 or so years.
We have about 30 seconds left in this segment. Just in this segment,
okay.
Vincent. But do you think that the bull run is it like a surge getting back up to normal, of going from zero or dormant up, and is that the risk that once that surge of getting back up to normal is finished, we tail off after that?
Yeah, eventually it will come back down to earth at some point. The question is when and how sustainable it is. With the industrial economy starting to come back online, demand still growing in the market, and we still haven't seen capital expenditures yet. There's a lot of people sitting on cash out there in the market. That has yet to reveal itself either, and it may take time. It may take another 3 to 4 months before we actually see that calm down.
Yeah, and with the new stimulus package that they're discussing right now, how that will work out will be a big tell. That's the anxiety, right?
It is, and I think we're going to talk to Anthony Smith, our chief economist, about that.
We'll definitely do that.
Thank you so much for your time today, Zach Strickland.
Thank you, Zach.
Director of Freight
what
market
he's saying
intelligence.
is what he's saying. We talked with Ken Sherman last week.
Yes.
From IntelliTrans, and he was saying that definitely the raw materials that they're moving in bulk are picking up. There's absolutely no doubt about that whatsoever. So there's
And it's
definitely
translating
support.
now into
Yes, it
finished
is.
goods.
Yes, it is.
Or goods in progress as well.
It is. Let's hope it continues.
Yeah. So so those raw materials are picking up, but there's this surge of getting everything back to say 100% or whatever the new normal.
Well, that's
is,
kind of what I'm
and then
trying to
it's
figure
going
out myself.
Go back to normal.
Yeah, I
or
don't.
normal volumes.
Yeah, I don't see it dropping back off or anything like that anytime soon. There's certainly no indication of that at all. Things look
Certainly
pretty
not
strong.
another April.
Certainly not another April. Let us pray that that doesn't happen. With COVID resurgence and stuff, we get it under control and so on and so forth. But I agree with you. Kind of is there this bull rush that then to get everything back in place and the pipeline's full and then it starts to. So we haven't hit that yet though.
We have not. We
Yeah.
definitely have not hit that at all. So we'll see if that, and a lot of that has to do with consumer confidence, right?
It absolutely does, and I think, like myself, I think most people are fairly confident that they're going to come through with another stimulus package here by the end of the week, and I think they will. I don't think there's several reasons. One, it's probably the right thing to do for everybody involved, right? But two, you got to look at it from a political standpoint as well. Neither side wants to be the ones that kills this deal. It's an
No.
election year, et cetera.
Yes.
Right? And nobody's going to willing to stamp their flag on. Boom! I'm the one who killed. No.
No, they're not. That deal is going to go through. And talking about consumer confidence, I think Anthony Smith, our chief economist here at FreightWaves,
Awesome.
has some new data on that coming out. Don't we, Anthony?
That's right. We just got recent consumer confidence data not too long ago. We saw that it did indeed click down in the most recent month in June. I think this is something that we all really expected with consumer confidence. This most recent one was released from the Consumer Conference Board. One of the many things that happened in the most recent month was that we saw a decline in employment, some opportunities in certain states. We also saw that there was an increase in cases. And so the consumer confidence index is broken down into separate components, and so from some of the components that we saw was that there was decreases in both the short-term and the future outlook for consumers, and so that's something that we saw was a little bit of a difference from previous consumer confidence surveys. A lot of them were a little bit more pessimistic about the near term, but optimistic about the long term. This was a little bit of the inverse, where it was just bad all around. But again, this was is still above the overall pandemic lows, where we saw readings around 80, but still a far cry from the readings of 130 plus what we saw in February. So the consumer confidence is definitely taking a hit, and I think one of the things that we mentioned just a little bit earlier when you alluded to potential stimulus packages being proposed and put out, that will also probably play a role in forward-looking consumer confidence in the next month's report.
So just to be clear, Anthony, you said that the consumer confidence index for short and long term both were down, but not down to the levels where they were back in April.
That is correct.
Okay, gotcha.
So Zach mentioned it a little bit. I think you have some new information on capital spending or CapEx. What do we have for that?
That's right. So we also got the Census Bureau's report for durable goods new orders, when we saw that durable goods overall increased 7.3% in June. This comes after a 15.1% increase in May. Now, this is a substantial increase, especially in May, but that has to be kind of prefaced with coming off of the backs of April, which was a horrific month all around, with an overall shutdown throughout the country. Now, when we're looking at some of the increases, is a movement in the right direction, but we have to keep in mind that this is still a far cry from the levels that were reached a year ago. So when we're looking at overall durable goods new orders, this is still down 13.3% on a year-over-year basis. But again, it is a movement in the right direction. One of the things when we're looking at this report is that there are going to be industry variances when we're looking at overall manufacturing. We're looking at overall durable goods. Of course, there's going to be a little bit more support for those that are more consumer-facing, and there's going to be some declines on some of those that are a little bit more harder hit for the impacts from COVID-19. So, for example, motor vehicles and parts increased 85.7%. On a month-to-month basis. It's still down 25.5% year over year, but it's an increase nonetheless. Now, this is compared to non-defense aircrafts, which dropped 462%. Now, expectedly, when we're looking at aircraft, there's going to be a lot less flights being taken around the country and throughout the world, expectedly. So that's going to be an expected diminished point as we move forward in the months to come. Of course, there's always going to be those variants that are going to have those wild swings, like defense spending, which might be up 10% on a year-over-year level 1 year or 1 month, and then down 15% the next. So those are going to be some of the variances to watch closely as we move throughout these rest of the months in the year.
So, Anthony, you mentioned, I mean, the durable goods, et cetera, all the different parts were better in May and June, but obviously coming off of a terrible April, right, Kevin and Anthony? So they're moving in the right direction, but they're moving in the right direction, right? They're positive movements. Is there any indication, or are there anything in the sentiment indexes that would support future growth in those right now? Are you expecting this to continue? What's the feel there?
Sure. So when we're looking at sentiment overall, I think the main thing that's going to really lead the course of what's happening within this component is the course of COVID-19. So that's going to be the biggest headwind and the biggest barometer to really kind of guide or where this segment's going to go. When we're looking at cases increasing, that can really start to play a role with more factories either reopening or shutting down or shuttering altogether as we move throughout the rest of the year. The other aspect that we're going to have to look at is if these employment rates start to kind of waver throughout, waver at all. Of course, we're looking at potential fundings that are being proposed right now. There's nothing set in stone, but we're looking at business investment. That's one that will play a big role in whether or not we see any kind of movement for capital goods expenditures. I think in the latest report we saw that there was an increase of 3.3%. Now this is only down 2.3% from last year's level. So that kind of shows we've talked to like these larger year-over-year declines in these more recent reports, but we're looking at non-defense capital goods excluding aircraft. They have a little bit of a smaller year-over-year variance, and that kind of signals how weak some of this business investment was just a year ago, that they're still in the single digits levels on a year-over-year basis. So when we're looking at the trajectory of manufacturing, the trajectory of the sentiment around investment, I think it's going to come down to the course of the virus and how that really is going to impact employment opportunities throughout the country.
Excellent. Thanks for the insight,
very
Anthony.
Interesting things. Coming out this week, do we have a busy economic data calendar for this week, or is it mostly next week for the first week of August?
We do. Of course, we always have those jobless claims, which I am expecting a lot of upward pressure being put on as more cases kind of come throughout the country, and again with those continuing claims. And the biggest one I think everyone's going to be waiting to see is, of course, that GDP number that is set to be released Thursday morning.
And so what? Sorry, I missed that last part. What everyone's going to be fixated? Was it the initial jobless claims?
Gross domestic product. So GDP is set to be released Thursday morning, and I think a lot of people will be waiting with bated breath just to see how horrific it's going to be.
Exactly right. Yeah, GDP number. How could I ever forget that? Definitely. So tomorrow you guys are doing Freightonomics, you and Zach Strickland. Do you have a topic picked out yet?
That's right. Zach and I will be doing Freightonomics tomorrow. I think we're going to go around some of, in accordance with GDP, some of the happenings of the second quarter, do a bit of a quarterly recap. We touched on some of the earnings last episode, but I think we're going to look at overall transportation trends for the quarter and our expectations for the remainder of the third quarter moving forward.
So, Anthony, I'm going to ask you this. What is your top one or top two trends that you've identified for the third quarter? It can be transportation, economics. What should our viewers out there really be tuned in and focused on?
I think some of the things I'll be watching for the third quarter on the consumer side is the propensity to spend and save. So for those that are going to be receiving jobs claims and unemployment benefits, as it might be much needed as cases are increasing, I'll be watching to see how much that saving rate is going up. I think as we're moving throughout the second half of the year, it's going to be really, really crucial for consumers to be able to save and be able to position themselves in a stable situation. I mean, one of the biggest areas that a lot of consumers are going to be potentially being hit with are potential eviction threats as some of the COVID start to calm down, hopefully, in the latter half of the year. So for those consumers, I would really be hoping to watch to see that they are putting themselves in a good financial situation so that they are not using up all of their cash right away. Although consumer spending pushes our GDP around and lifts our economy, also want to make sure that the consumer is in good financial standing. On the construction side, I think that's going to be held up pretty substantially. And with manufacturing, definitely going to be looking at those new orders for when it's coming from the PMI or non-defense capital goods. Those are going to be my go-to barometers, especially on a regional basis, looking at those Dallas Fed surveys. So that Empire State Index and Kansas State. So looking at those regional states surveys for the manufacturing front. So that for consumer and businesses and manufacturing, those are going to be the three go-tos for me.
Good insights. Thank you so much, Anthony.
Always.
Yeah, I'm looking forward to see the next economic numbers.
I am too. The GDP number, I always forget that it's that first month or that last of the first month after the close of the quarter. July's flown by so fast. I'm still thinking that we're just right out of the second quarter, but we are well into the third quarter right now.
We're blowing through it.
Mark Horowitz, Director of Sales at RPM, says produce is dead. Reefers refuse to go to Florida.
Oh, is that right?
That's what he's saying, yeah.
Oh, okay.
So that's that's interesting. I mean, you have the wave of COVID cases in Florida, and basically if refrigerated carriers aren't going down there or drivers aren't going down there, it's going to be a tough market for the produce season going forward. Definitely.
Yeah, you would. I mean, you can see it, and I just pulled it up on Sonar to try and take a look at that. Looking at reefer rejects in Florida in the Florida market.
It's pretty high.
Yeah, there's definitely bumps going on there.
Bumps
there's
going on.
There's no doubt about it.
I wouldn't doubt it whatsoever. So at 2:00. Andrew Cox and I are going to be joined by Seth Holm for our next Great Quarter Guys, where we will be doing a lot of little debates, right?
Okay, what are we talking about?
Long or short, right? So are you long something or short something?
Yeah. I like that.
Or see or no? It's kind of the same philosophy on that. So we have about 6 or 7 topics, and we'll be doing lightning rounds of what we think about those. So a lot of them are hot button, topics in the financial markets and transportation. So that's at 2 p.m. Eastern time. So about an hour after we wrap this show, we'll be back joining you for our next show. And then Wednesday on Put That Coffee Down.
Yeah, what do you guys got?
We have Toby Howe, who runs social media for The Morning Brew, which is a newsletter that's worth millions of dollars now. Very active on Twitter and gets into a few scrapes. But he has his 10 rules of running social media for a business or a brand, and they're very enlightening.
Excellent.
Yeah, it's excellent. They're great 10 rules.
Yeah.
These 10 rules should be good for anyone.
Tease us with a couple rules, or are you keeping them a secret?
I'm going to keep them a secret.
Okay.
I'm going to keep them a secret for the show. Don't use emojis. I will.
Oh, is that?
Yeah, that's his rule.
As a business, don't use emojis.
Don't use emojis.
Okay.
And another one, I don't know if that's part of his 10 rules, but it's like if you have different, like LinkedIn and Twitter, don't talk to yourself because it looks like you're talking to yourself. So, commenting and
commenting
kind
on
of
your own posts?
interacting, one company interacting across social media platforms.
Yeah.
That's a rule that he has. Maybe it's after that chin.
Oh, so like other employees of the same company commenting on the same thing back and forth. I got you. All right.
Exactly right.
I was going to say.
So that's Wednesday at noon, and then Thursday at noon we're back here with the Midday Market update.
We are, and that's going to be an interesting show because we're going to look a little bit upstream at the freight market. Right, we're going to be talking
raw materials. You're going to swim upstream.
A lot of it has to do with it, right? So you've got Hey Boomer, Steve. How do you pronounce his last name? Ferrara. He's going to be on. We'll be talking about ocean.
Oh, good.
And
He's got
what's
really good
going on there. He's got great insights. So we'll get to see what's going on with international trade as far as maritime is concerned, and what's happening there, and what it looks like now, what it looks like moving forward. Blank sailings, are they unblanking sailings, that type of thing, right?
Yeah.
And the movement of goods, what is moving, what's hot, what's trending, that type of thing, which is always indicative and a predictor of what's going on in the domestic freight market in the United States, right? It leads it. And I don't know if you know this or not, but we have the ocean dashboard within Sonar now, which actually goes further upstream than the customs data and the movement. These are bookings before it ever even goes on the carriers, and so you can see what is happening there. So we'll talk a little bit about that stuff there, and then we have Jared Flynn from bulkloads.com.
Yeah.
Right.
Yeah.
So we'll be talking about bulk load movement, rail car, etc., and truck.
Yeah, he has really great insights into those raw materials as well, in the agricultural markets.
Absolutely.
That dry bulk is a lot of hoppers and a lot of grains, a lot of end dumps. Talk about good friends. I forgot to mention, well, it might not be exactly for Put That Coffee Down, but we always give out a book each week. So if you haven't tuned in, please tune in. It's a freight sales podcast where
I have to start watching. I know,
right?
Just kidding.
I know. So we give out a lot of sales materials, but Mr. Supply Chain, Daniel Stanton, texted me this morning, and he's going to start offering for us to give away autographed books of Supply Chain for Dummies, which is a New York best time or New York
that's awesome. I'd like to get one of those. That's awesome.
Yeah. So that was really good news. So we'll start giving that away.
Can employees of FreightWaves win this or no?
No.
No.
You are exempt from winning it. We might be able to get Mr. Supply Chain to send you a free copy though.
Okay. Cool.
Yeah. If he's listening today, then definitely he can send an extra book here to the studio.
Best wishes.
Yeah.
That would be awesome. Yeah, that's good. That's a full lineup.
It is a full lineup. So
that's a very full
tv.freightwaves.com, freightwaves.com. The video's on there as well. You can download it on Apple TV. I have mine on my Fire Stick, my Amazon Fire.
Yeah,
Roku,
absolutely.
All of those great mediums. But what else? I mean, you're in tune with the freight markets every single day, Michael Vincent.
I am.
What are the trends that you're most interested in ground transportation?
Well, I'm really interested in understanding really what the Great Debate was about. Or the son of the Great Debate, or the Great Debate 2, whatever you want to call it. Great Debate.
Where you refereed.
Where I refereed, right? Yeah. And I mean, we got a lot of knowledge out of that, right? Two very, very smart people who know the industry very, very well, and they really, again, they weren't disagreeing really. And one person pointed out we never really did call when the bubble's going to pop, because that's a very, very difficult thing, and pop is a hard word to define.
Is it a bubble?
When will it stop the bull run? I think is more appropriate, right? I don't think it crashes. So, really digging into that and utilizing a lot of the different tools within Sonar is what I've been digging into lately, and you can see it on my post on LinkedIn. Really looking at, okay, you're looking at the outbound tender volumes, and clearly they were up. And you're looking at the different industrials, the IPROG and IPRO, which is just, the industrial production year, but IPROG is year over year of the different, manufacturing, consumer goods and durable goods, non-durable goods, all this kind of stuff, and really see how those volumes lead that. right? So it comes in afterwards, and it's kind of the proof afterwards that yes, this is more, and you're seeing more and more industrials pull in there, which is pushing that 13.1 up, right? I wish you had a quicker view into some of those other ones, but this is telling you exactly what's going on a daily basis, so you can see what is happening, right? And then breaking that down by the different modes as well, like Zach was talking about. We've had this discussion many different times. When you look at the Cass Freight Index, it's got a lot of rail and intermodal in it, right? And if you are to trend that out within Sonar, you'll see that it closely matches, or it's much more correlated to rail car movement and intermodal box movement than it is truckload, because it is heavily weighted that way, right? I'm not sure exactly what that percentage is, but it definitely is. So you break it down. I got the Cass Freight Index that I'm looking at, right? Because it's got kind of that mix. I'm looking at O-Rail. I'm looking at domestic international container movements, or domestic container movements, international container movements, loaded and empty, because you can see where those empties are going. If the empties aren't going back to LA and they're going to some inland place, there's probably something about to happen, right?
Yeah, there probably is. And I mean, I find it very interesting that you have this bull run, but you had a large swath of the economy stopped. I mean, a complete standstill. So you have all of this pent up demand that has to get back to a fully functioning manufacturing plant, distributor.
Yeah, you absolutely do.
So you have this huge surge, right?
Right.
But when does it reach back to? I guess normal is not a great word for it, but it ramps up to full production again, right?
Yeah.
And then the incremental type of movements, or your normal everyday, driving the economy.
Yeah.
But not this huge ramp up of getting things back to normal, especially on the industrial side. How long does that take? And I think that's a question we're all asking ourselves right now.
It really is, and even it brings up. There's a ton of stuff to unpack with that. We talked to Anthony Smith. Anthony Smith brought up the fact that consumer sentiment was slightly down, not like in April, right? Once this stimulus package changes, I bet that changes.
I bet it does too, right?
Right. I bet that goes back up, right?
Yes.
So you could see yet another surge. We could surge past 14,000 on the OTVI. You don't know. As you're ramping up and people get another $1,200 or $1,200, $1,400 per adult or something like that, which you're talking about. I think the only argument that is in there, right? Well, that's probably not the only argument, but one of the things that is in this stimulus package that they're looking at is cutting those unemployment benefits, the additional benefits that is from $600 to $200 a week, which is in the GOP's proposal that came out yesterday, they started discussing and tearing it apart yesterday. But so that's in theirs. But the other side, the Democrat side, is saying, oh no, you're not touching. It's not going to 200. It's staying at 600. So they'll get it passed and it'll be there. Once that passes, consumer sentiment changes again.
It does.
So if you go into this relative reverse of opening up, right? Maybe slower, smarter opening up, right? And you've got unemployment benefits that extend out another few months at 600, right? And you got everybody else getting a $1,200 check per adult. And then, there's considerations for children as well. So, family of four could potentially get somewhere like $3,600 or something like that in a check, something like that. It's not bad spending money, not bad. And like we've said before, you give the consumer money, they spend it. Right? They're going to spend it. And then there's if this doesn't work, the government will just print more money. Now, you and I know, and a lot of people out there watching the show know, that's not such a good idea.
No, it's not such a good idea.
But nonetheless, the majority of the people are going to be looking at it and are going to have that feeling of, they've got our backs, we're covered, and it keeps moving things forward while the economy is still opening up. This surge could last. There could be a huge holiday surge. You send a family of four a $3,600 check in September and see what happens for Christmas spending.
So you're laying out the cases how this bull run of freight can go longer than anyone expects.
I'm not an economist, but I'm watching what happened. I learn. I'm a quick student, and I'm watching Sonar, and I'm trying to find out where these things are going. And I don't see anything that shows it slowing down, other than the angst or anxiety that people feel about what's going to happen at the end of this week. Mm-hmm. And I don't know why I'm showing you my watch. Well, it's got a calendar on it. See, it's almost the end of the week. I'm showing you my watch. There's proof right there. But that's the anxiety, right? Mm-hmm. But they're going to do something.
They are going to do something. I think, and Anthony highlighted the GDP number that's coming out later this week. I think that's going to scare. If you're a politician, I mean, this is a fact of life, right? If you're a politician, you see a print of 25%, 30% down GDP,
right?
You're going to vote yes, right? I mean, you're gonna get that out.
Well, if you're a politician and you don't think that it's going to be a bad number, you need to be voted out.
Probably, yes.
Or just resign because you're not paying attention.
We're 100 days.
You're not paying attention.
But within 100 days of election. Anyway, we're having some Skype difficulties, so we're going to wrap it early today.
Oh, okay.
I think that's what they told me.
Yeah.
Yeah. So,
okay.
So,
well, hey, it was a great discussion anyways.
It was a great discussion.
I hope everybody got something out of it. So
very good. So we'll be back Thursday at noon.
We will.
12 p.m. Eastern Standard Time.
We will. That'll be a good show. Like I said, Steve Ferrara and Jared Flynn.
Yes.
So that's going to be a really good show. That's going to be a really good show. And then I got Tom Curie from Kingsgate on freight forecasting Thursday. So they take data, and a lot of it is out of Sonar, and they give out market updates to their customers and add value there. So we're going to kind of go through their latest market update through that and how they utilize Sonar within 3PL and how they utilize it for their customers.
Well, we've been told we have something good today, so we can go into something good right now.
Well, there's always something good.
So there's always something good, and also we had the 3PL Summit last week. You can find all that archive video, great Market Waves talks, fireside chats. We had our very own CEO and founder Craig Fuller on a couple of those. One of those with Jason Miller as they talked, and Andrew Cox talked to Kenny Lund, and we had really great programs. Put That Coffee Down had the Real Wolf of Wall Street, Jordan Belfort. So
absolutely.
You can check that out all on demand. But we have something good here, right?
We do have something good here. Oh, yeah, right here. Hitchhiking cat is returned to family, right? Which is pretty good. In these tumultuous times, this is from Chalissa Merchant. In these tumultuous times, our family has been blessed with a true act of kindness. Our cat went missing yesterday, and it turns out that this cat traveled from Redvers, Saskatchewan, Canada, to Ioga, North Dakota, which is in the U.S. if you didn't know that, then to Kramer, North Dakota, underneath a tractor, underneath a Class 8 truck. Right?
Yeah.
And the driver found him last night at the end of his route, and he called the local vet clinic, who kindly looked up his identification number, and they got a return. So this cat was a stowaway and crossed international borders at the time.
International borders, and they got the cat back.
But they got the cat back. They absolutely did. But also, we've got the Carrier Summit. So FreightWaves and Seat My Trucks are excited to present the Carrier Summit on recruiting, retention, regulation, operational efficiencies, and maintenance. We expect to hear from trailblazing trucking pioneers who have impacted the way we do business today and the way we will do it tomorrow. So you can get the latest updates on how truckload carriers are adapting to the new world we live in and where that's kind of going, right? So that's going to be awesome, and that is
August 19th and 20th.
Yeah. And so we've got some great keynotes lined up, although they're not spilling the beans because they're not spilling. Yeah, they're not spilling the beans yet because
we have some great sessions. I'm taping a session on Friday, and that's going to be really good. Really carrier focused. So
excellent.
I'll talk about that once that's in the books. But yeah, we're lining up two full days of great things. So, and a couple weeks ago, this is interesting here. A couple weeks ago on Put That Coffee Down, we did improv right? So we had the improv instructor from Chattanooga.
Oh, yeah, that's right.
on,
How did that-
and
I
think we've
did
been
actually
doing
miss that
improv
show,
here for-
unfortunately. How
Yeah,
did that
but
go?
I think we've been doing improv here for about 20 minutes. Which is-
Reach out to him, show him the tape, see if we did well.
I know, right? We definitely will. But we are going to wrap it right now for this edition of the Midday Market Update. Thanks for joining us, and we'll see you Thursday at 12 p.m. Eastern Standard Time.
You got it. Peace and love, everybody.